KG, is there a difference between pre-qualification for mortgage and pre-approval? Should I be concerned if I only get pre-qualification, or if you're a seller and you're looking at contract for your house, should you be concerned if it's just pre-qualification or pre-approval? Yes, you should. We'll talk about that in a minute. Hey there, this is a KG. I'm a realtor with Fairfax Realtor in Greenbelt, where we help buyers to buy a dream home and sellers to sell their houses. And we do this in the Maryland, DC, and Virginia region. So if you're looking to buy, sell, or move or invest in real estate in Maryland, DC, and Virginia region, definitely contact us. We'll take care of you. And don't forget to subscribe to the channel so you get updates once we upload a new video. So what is the difference between getting a mortgage pre-qualification and a mortgage pre-approval? A whole lot of difference, right? I always say pre-qualification is not even worth the paper that is printed out. So what am I talking about? Let's break it down. So if you're getting a mortgage pre-qualification, all that means is the lender talk to you, get your information, nothing, no record, no document to back up what you're telling the lender, and the lender, based on what you said, they say, oh, based on your income you can buy a house of 500,000. That's pre-qualification. Anybody can do that. It's not worth the paper that is printed on. However, if you're doing a mortgage pre-approval, the lender will talk to you, get your information to pull your credit reports. Once they get your credit report, everything is good with your credit report, they will request your income information, pay stub, bank statement, your tax return, 2-year tax return, verification of income. They're looking at your pay stub and they're going to verify that your income is still valid. My lenders do that. By the time they give you the pre-approval, you know your loan is good, unless you did something that is not going to make it to good. But what can happen? What is the worst thing that can happen if it's just pre-qualification? Well, let me give you a scenario. You talk to a lender, you tell them, I'm making 10,000 a month pre-qualification, and truthfully you're making 10,000 a month. But what you did not say is, from that 10,000, 3,000 is from a part-time job that you just started, or a side gig that you're doing that makes it 10,000. Now you have a house under contract, the lender now requests information, and you only have income for 7,000. The other 3,000 is a side gig, less than 2 years. It's not even on your tax record. They cannot use that. Now your income is reduced. Or that 3,000 is a part-time job that is less than 2 years. They cannot use that. Your income is reduced. Or that 3,000 is from your overtime that you take, you get from your job, but it's not regular. It's not something that can be counted on. So that reduces your income from 10,000 now to 7,000. Another scenario, you tell the lender, I make 100,000 last year. Truthfully, you do make 100,000. Your income say you make 100,000. But guess what? When you file your taxes, you have a side gig and you're taking a lot of business deduction. By the time you finish filing your taxes and taking all those deduction, your 10,000 income is now reduced to 40,000. Oh yeah, I've seen it happen a lot. So your adjusted gross income now is 40,000. Well, the house that you qualify for with 100,000 income, you cannot qualify for it with a 40,000 adjusted gross income. It's not going to happen. So that is what can happen if you don't get pre-approval and you only get pre-qualification. So those information were not vetted before you put a house on that contract. So those things are very, very important, because you will not be able to buy the house that you like if you only get pre-qualification. So what should you do if you're looking to buy? Make sure you talk to a lender that will give you a pre-approval. They will ask all the information that I just talked about. Your pay stub to current pay stub, your tax return for 2 years, your bank statement where your money for your down payment is coming from. And they will look at all this information and give you a pre-approval. If a lender is not doing that, I don't think you're going to buy the house, because they're not really doing the due diligence to be able to give you a pre-qualification. So if you are a seller and you're looking at contract on your house and you're reviewing contracts, your agent should tell you this. This buyer is pre-qualified. trash it. That's what I do with my buyer. I mean, with my seller, trash it. Because pre-qualification is not worth the paper that is written on. Trash it. You want to look at buyers that are pre-approved for a mortgage because they have been vetted. You also want to read the letter to make sure that the lender specify in the pre-approval letter that they've checked their income, they have verified, not check, verify the income, verify the tax return. You want to check. Those things are important. Those things can make or break a deal, even at the last minute. So, what is the difference between pre-qualification and pre-approval? A whole lot of difference. The difference is in you buying a house or not being able to buy a house, in you selling that house to that buyer after you've put it under contract for 30 days, or you selling to the buyer that is already pre-approved and you can close quickly. So know the difference and know when to say nope, I need a pre-approval. All right, so if you're looking to buy, sell, or move in Maryland, DC, or Virginia, contact us below. We'll take care of it. And don't forget to subscribe to the channel. Thank you.